Welcome to Dare, the show for innovators, entrepreneurs, and startup leaders who dare to shape the future. Your hosts today are Ned Hayes and Cecilia Mariani. Dare is brought to you by Darwaf, the superpower tech team that can make your vision a reality. The Dare podcast is happy to welcome Matt Bodnar to the podcast today. He's the founding partner at Eidolon Capital. He's been a Forbes 30 Under 30 and an Inc. Fastest growing company partner. He's a private equity investor, and he's been the creator and host of the Science and Success podcast, which had over 5 million downloads. Bodnar has worked around the world and spent years at Goldman Sachs, and now he's at Eidolon Capital. So welcome to the pod, Matt.
Ned, thank you so much for having me. It's great to be here, and I'm excited to dig in.
Well, I'd love first, what is Eidolon Capital? Tell us about it.
Yeah, Eidolon Capital is basically an investment company that invests in small businesses, right? And I'm sure you've probably heard some of the stats around, people will sometimes use the term silver tsunami, but depending on the numbers, there's a couple different iterations of this. But the short version of the story is there's a tremendous amount of businesses that are owned by baby boomers that will need to transact sometime in the next 10, 15, 20 years. And a lot of those businesses, probably the vast majority of them, easily probably 70, 80%, maybe 90% of them will just close or never find a home, right? And our approach at Eidolon, even if you just run the stats from, depends on which data source you look at, but something like the SBA or a few others, I think probably 85% of all businesses are sole proprietorships, right? So there's like 30 million businesses in the US, and it's I think like 27 million of those are sole proprietorships or one-person businesses. And if somebody's a sole proprietorship and they're closing down, in most cases, there's not really a lot for a buyer to buy, though in some cases there could be, and that business could have a legacy that continues on, and either the name or the customers, or the service model or whatever could live on with someone else. And so that's kind of to some extent what we do is we look for folks or companies that are going through a transition period and try to provide them with home or a place where someone will take care of their employees and their legacy and build the business into the future, as opposed to just the alternative of maybe shutting it down or even selling it to a competitor sometimes where, they may subsume the brand and cut a bunch of the staff, et cetera, et cetera. So our approach is really informed to some extent by some of the ideas of books like Conscious Capitalism, where we think about, hey, how can we try to have a more holistic approach to the various stakeholders in the business and create wins for everybody? That's not to say we're not the capitalist side of the conscious capitalist too, and we focus meaningfully on financial returns. But, our thesis is really around buying small businesses and giving them some TLC and some modernization and applying things like digital marketing and technology and some of the stuff that might get left out, in a 25, 30 or 50-year-old business and helping it modernize.
Got it. Yeah. So it sounds like you've identified a way to build value even in the midst of this silver tsunami. So tell me more about the silver tsunami. Like, I know there are sole proprietorships, but what's going to happen if a lot of these people, walk away and ultimately retire from their businesses?
Yeah, it's a really good question. And I've done a lot of research around this, and I pulled a lot of different data sources to figure out this question, because if you pay attention to the M&A world and the business buying world, broadly, you'll hear a lot people talking about the silver tsunami or this wave of baby boomer businesses over the next short end, probably 10 years, maybe long end 20 years, that will have to transact in some form or fashion, right? And so I went all the way back and I looked at things like the SBA and other data sources that track private business ownership in America. And if you look at it, the total number of private businesses in the US is somewhere in the 30 million business range, right? So wow. I've seen estimates as high as maybe 33 million, as low as kind of like 29 million, but somewhere around 30 million, just as a placeholder, is a good kind of estimate for how many of those businesses are, or how many private businesses there are. So excluding big public companies and that kind of stuff, right? Of those, there are about 27 million of those are what they call sole proprietorships, which are basically businesses that have 0 employees. And that's, back of a napkin, call it somewhere in the realm of 85 to 90%. Again, different estimates have different numbers, but that's sort of loosely where it sits. I've seen estimates as low as 80% of businesses are sole proprietorships. I've seen estimates as high as 90%. But somewhere, if you're at like kind of low 30s million, 27 million or so are those are sole proprietorships. And then it's like a inverted pyramid or a pyramid, depending on how you look at it, where it's like, then you have sort of 1 to 5 employees, and that's a couple million. And then you have 5 to 10 employees, and that's maybe a million businesses. And then you have, 10 to 20, and it gets smaller and smaller. As businesses get bigger, obviously there's fewer of them. And so based on these estimates, the next question is, okay, so there's 30 million private businesses in the US. Well, how many of them are owned by baby boomers, right? Again, different estimates. The low that I've seen is around 40% of private businesses are owned by baby boomers, and the high is about 60%, right? So if we take a midpoint, we just say, okay, well, what's the midpoint between 40 and 60? It's 50, right? So 50% of businesses roughly in the United States are owned by baby boomers. So we have 30 million businesses. 50% of them are baby boomer owned. Again, we're making assumptions here, but we're kind of rough ballparking this.
But rough ballpark estimates, we're ending up with a big number.
Yeah, so that's 16 million businesses that are owned by baby boomers that, again, at some point, right, unless we hit the singularity and everybody lives forever, those businesses probably have to transact or be handed down or whatever. And so then it becomes a question of, well, how do we slice up that 16 million, right? And I think there's two big ways to slice it. One is you slice it over time, right? So all those businesses aren't going to transact in a single year. So the question is, okay, well, what's a reasonable time horizon for us to divide those over, right? And so I think the short time window would probably be 10 years. I think a more reasonable window is maybe 20 years, right? So over the next 20 years, give or take, 16 million businesses would need to change hands, right? And if you just divide 16 million by 20, you get about 800,000 businesses a year that need to change hands, right? From that they're baby boomer owned. And then we get to the next piece of the puzzle, which is, okay, we've divided them by time, but not all of those businesses are going to necessarily want to sell, right? Or be handed down. Maybe it doesn't make sense. Only a few of them really are going to be viable businesses that can be passed on or sold or whatever. And so, I think even a very conservative assumption of saying, hey, out of those 800,000, let's assume 20% of those could be sold, right? Or could or should be sold, which means about 80% of them are just going to close and go out of business, right? If you assume that 20%, we just take 800,000 times 20%, the math is pretty simple. That just gets us back to, it gets us to 160,000 businesses a year, basically, right? Mm-hmm. Which if you look at current M&A transaction volumes, it's somewhere in the realm of 20 to 30,000 businesses sell annually in the United States. So we're going to add about 160,000 per year on top of that based on these assumptions. There's a lot of businesses that need to sell, right? And that's assuming only 20% of businesses are even viable and can be sold. So when you add those things together, you hit this equation. The short version is there's going to be a lot of businesses that aren't going to have a landing place, aren't going to have a home, aren't going to have anywhere to go. And we think there's good economic sense in doing this, right? Or we probably wouldn't be doing it, but we want to some extent, provide a home to businesses that we think have a lot of long-term enduring potential, and we can, help them modernize and kind of take them to the next level.
Fascinating. So can you tell me about some of the businesses that you've actually helped to do this?
Yeah, absolutely. So we have a current portfolio of a number of different operating companies. One of our businesses is a manufacturer of portable sinks. And so we manufacture portable hot water hand washing, self-contained sinks. Very niche business, but really, really cool company. We have a business that distributes pallet rack and industrial shelving, material handling, that sort of thing. We have a business that is a staffing company focused around skilled trades, warehouse workers, industrial workers, et cetera. We have a business, we recently sold a business that was in the medical equipment world. We've got a couple other kind of minority investments in a few different businesses. We have an IT firm. We have a software company. Those are less so the sort of modernization stories, but they are sort of portfolio investments that we have. And, generally our thesis, we encounter this all the time where we'll find a business that is owned by, a business owner who makes great money, right? And their life is great. And they have no real desire or interest to go and learn digital marketing, right? Or build a sales force or take their process that's been working for 25 years and digitize it, right? We've bought businesses that literally the entire company operated on pen and paper, carbon copy sheets where, and they were hand filling out, in some cases, hundreds of these a day and passing them between departments and stuff, right?
If it ain't broke, don't fix it, right?
Right? Yeah. And that company was 50 plus years old.
Yeah.
And they were making good money. And why change, right? If you're the business owner, this has been working for so long, it's been working since before I was born. You know what I mean?
Right.
And yet digitizing that stuff creates a huge amount of efficiency. right? And
Right.
so there's opportunities like that all over the place, right? I mean, there's tons of these businesses that are really under optimized, don't even have things like websites, basic sales, marketing infrastructure, haven't been digitized, haven't been professionalized. And so that's really kind of where we focus our efforts.
Right. So part of your work is really optimizing the business for the digital future that we're in now. But the
Yep.
other part is the merger and acquisition side. So when you think of that, are you brokering on behalf of the business or on behalf of the buyer, or sometimes both or either?
So we're buyers, right? So our
Okay.
thesis is basically we go out and buy these businesses that we want to do that to.
Got it. Okay. So you aren't
Yep.
necessarily brokering a deal for somebody else to buy.
No, I mean, occasionally we do a lot of deal prospecting, spend a lot of
Yeah.
time and money on deal sourcing. And so
Yeah.
occasionally we'll encounter opportunities that aren't a fit for us and we'll send them to friends or family or, folks who might have interest in them. But no, that's not sort of our primary strategy slash focus is all about finding these hidden gems and buying them and hold. And we have sort of a buy and hold approach in most cases, not every case, but buying them, holding them for the medium to long term and helping to sort of professionalize them and build value and hopefully grow them.
Got it. Okay. Fantastic. Well, it's a really unusual business to be in because a lot of people are building something fresh or without an existing revenue base, and you're going into businesses that already have a revenue base. So you aren't trying to create a market, you're trying to figure out how to build efficiencies into their existing market or their existing product set, right?
Yeah, I mean, that's exactly right, Ned. And it's funny because my thesis is I think it's actually much more attractive to buy a business instead of starting one, right?
Mm,
And I think the math is pretty compelling, depending on how you slice and dice it. And there's lots of different numbers you could use. But, round numbers, you can absolutely start a business in the United States with $0 invested, right? You
right.
can also, with creative deal structures and financing and stuff, you can buy a business with $0 invested. The reality, though, is in most cases, if you're going to start a business, you'll probably have some seed capital. And if you're going to
Mhm.
buy a business, you'll probably have some equity capital or some dollars that go into the purchase of the business, right? And so if you were to take an average startup or an average acquisition and let's say pick a number like $300,000 as an investment that's going into that. If you
Yeah.
take 300K and whether it's your savings or money raised from friends and family, very common to see a new startup business raise a few $100,000 from friends and family investors, right?
Yeah.
So if you started a business and you raised a few $100,000, what are best case scenario in 18 to 24 months, right? What do you have, right? You probably may not even have a completed product. Maybe you do. Maybe you have an MVP, right? Maybe it's a service business or something. You might have a handful of customers, right? You may not have any customers yet. You may or may not have product market fit, right? You may not even know if people actually want to buy what you're trying to do. You may have a handful of employees, but really probably just have the founders of the business. You don't have really any profits, right? Or very, very, very common for startups to operate at a loss. And you probably will be burning money for years to get to profitability. Now, if you took that same $300,000 and you bought a business, well, what kind of business could you buy and how far would that go? Well, you might think, okay, well, that's not going to buy a very big company. But the magic of a leveraged buyout or using something like the SBA 7A program, you can get up to 90% financing for the purchase of a business, right?
Tell us more about this program from the Small Business Administration.
Yeah. So with an SBA loan, right? I mean, that's SBA 7A, just most people just call them SBA loans. But if you get an SBA loan, you can get 90% financing for the purchase of a company, right? So if you take 300K as your capital, you can get, call it $3 million bucks, right? Or, $2.7 million or whatever as an SBA loan, which means you could actually take 300K and buy a $3 million company. So a $3 million company starts to get a little more interesting than a 300K company, right? And so there's lots of different ways you could derive the valuation of a business that's worth $3 million. But I think an easy way would be looking at most businesses are valued on an earnings multiple, right? So company makes X amount of profit. We multiply that by a multiple of Y, and that's how we get the valuation. So to get to a $3 million valuation, we had a business that's making, let's say, $750,000 a year of take home cash profit, right?
Mhm.
A business of that size might trade at around a 4X multiple. Depends a lot on the industry that it's in and a bunch of other factors, but that's a reasonable sort of mid case multiple for a business doing about 750K of EBITDA, right? Or
Mhm.
profit. So 750 times four would be a $3 million value, right? So you could buy a business that's making 750 grand with that same investment, right? Now you're going to have loan payments and other stuff, but you're buying a business that has if you're making 750K of profit, you probably have several $1 million of revenue. You probably have 10 or 20 employees. You could have easily dozens, if not hundreds of customers. You have 10, 20 plus year operating history. You have inventory, you have assets, you have a presence in the market. You already have product market fit. I think it's personally way more interesting to buy something that already has all of those things and then use that as a platform to scale and improve versus, slogging it out and trying to find one customer from none to pay me X with a startup.
Starting from nothing versus starting where you're already in pole position and you're already moving forward and you already have some miles under your hoofs, so to speak.
Exactly. And, depending on the stats, again, different data sources have slightly different numbers, but around, startups typically have around a 90% failure rate, and existing businesses have annually about a 13% failure rate, right? So you're 8 to 9 times less likely to fail with an existing business than a startup.
Right. Because it's already proven. It's already failed in multiple ways and found the one way of winning.
It's already gone through the gauntlet, right? And it has customers, it has employees, it's a going concern. It's something that's already operating. You're stepping into things, in media res, as opposed to trying to get the wheel turning really slowly, which is very, very difficult.
Right. So that brings me to another question. Are there a lot of VCs or a lot of investors who are seeing this opportunity, or are you and people like you kind of standing alone?
So there's I would call it a growing community of people who are paying attention to this, right? And it depends. There's a couple different terms that you'll hear for the ecosystem of people who are out there buying businesses. A couple of the terms you might hear if you want to do some more homework on this world. One of them is called entrepreneurship through acquisition, or you'll often hear folks call it ETA. So the whole ETA world has really blown up, and there's a couple other related, basically synonyms for the ETA community. One is searchers. A lot of times you'll hear about people who are searchers, and you've got funded searchers who are people who say, hey, I'm going to go out and buy a business and I'm going to raise money to fund my search process and all of my expenses and so forth. And I'm going to pursue this for 3 years or whatever the time horizon is based on the capital they've raised. And then you also have what are called self-funded searchers, which are people who basically say, hey, I'm going to spend my own time and money to go find a business to buy, and then I'm going to buy it, right? And so those have different economic structures, but searchers broadly, self-funded and funded searchers are sort of two other buckets. And then the other term you'll sometimes hear, it can describe a little bit of a bigger or more of sort of private equity oriented buyer, but you'll also hear the term independent sponsor, which is basically something that's evolved in the last 5 to 10 years, which is before, you might have had the presumption that, hey, if I want to go buy a business, I need to go raise $100 million fund and do all this stuff. Well, independent sponsor is basically an economic model where instead of raising a big fund, you basically just say, hey, I'm going to raise money on a deal by deal basis, right? And so then you go find a deal and then you raise money for that particular deal. And so there's lots of different models out there. But yeah, all of those ecosystems have meaningfully grown in the last even 5 years, right? Since COVID, as a lot of the things like the silver tsunami have really started taking place, that world has grown substantially. And there's, I'd say it's still to some extent early days in a lot of that stuff. And a lot of the infrastructure is really getting professionalized and built. But personally, it's an area that I've spent a fair amount of time and continuing to invest a lot of time and energy in.
Fantastic. Well, so if I had a business that I wanted to sell, what would I have to do to get that business ready for sale, ready for this kind of transaction?
Yeah, that's a really good question. There's a lot, right? I mean, it depends a little bit on the business, obviously, but there's tons of different things you could do to prepare a business for exit. And the reality is most folks don't do the vast majority of those things. And the best time to do that is not if you were to say, hey, I want to sell my business tomorrow, right? I'm going to start doing these things. The best time to do that stuff is it's like planting a tree, right? It's years ago. And so if you want to sell in a couple years, now is the time to start laying down a lot of the infrastructure that can then help prepare the business for an ultimate exit, right? And I mean, we could have probably a 5-hour conversation about exit readiness and all of the different components of that, but I'll give you a couple just bullet points of things that I would consider paying attention to if I was wanting to prepare my company for sale. So one of the biggest barriers is what I would call owner reliance, or just like how dependent is the business on its owner, right? A lot, as we've seen just from the stats we were talking about earlier, 80 to 90% of businesses are entirely dependent on the owner, right? Which is a pretty huge number. And even bigger businesses, a lot of them are very owner dependent. And so the question is basically, if you have a business and you want to sell it, you have to have transferable value. You have to have something that a buyer can purchase, right?
Right.
And if it's you, then you don't really have a lot you can transfer if you want to get out of the picture and go move to the South Florida or wherever and sit on the beach. So you have to have the ability to scale yourself out of the operation. So what does that mean, right? It means a couple of things. One is a management team or management inside of the business that runs the business on a go forward basis without the owner. And that's a whole category of stuff to how to build a management team. But suffice it to say, you want to have one generally if you want to have a business that can be sold. The other thing you want to have are systems and processes, right? You want to have SOPs and checklists and, hey, we do this and this is how we acquire customers and this is how we deliver our value or fulfill our service or create our product or whatever it might be. You want to have all that stuff really systematized, because if it's systematized, it's much easier to transfer to someone than it is if it's all in your head. If it's all in your head, again, you can sell the business, but they're going to want you to come along with it, right?
Right. And if you want to sit on the beach in South Florida, that's not going to work out so well for you.
Exactly. And so those are a couple things. Others, I'll give you two more really quickly that I think are big drivers of exit value. One is customer concentration is really punitive to exit value. So sort of the inverse side of the coin is if you only have a few customers and you're highly concentrated to them, and a lot of times the bright line's around 20% to a single customer, though it can vary. But if you have more than 20% concentration to one customer, that can be a huge red flag for buyers. And a lot of folks are very reticent to pay big bucks or really anything in some cases for businesses that have very few customers that they're totally reliant on. The other piece of the puzzle is size is a massive, like if you go look at valuation data, what makes companies more valuable? It might seem obvious, but size is probably the biggest determinant of a company's value over industry, over pretty much anything else is just purely size. And that's even when you account for the fact that a bigger company would naturally sell for more, right? So if a company's making $1 million a year, or if a company's making $10 million a year, of course, the company that's making $10 million a year would sell for more, right? But it's going to sell for exponentially more, not just linearly more. So by that, I mean, company makes $1 million a year, it might sell for a 5 times multiple, which would be a $5 million value. The company's making $10 million a year, it's not selling for 5 times. So it's not worth 50 million, which would just be 10 times bigger because its revenues or its earnings are 10 times bigger. It would probably sell for somewhere closer to a 10 or a 12x multiple. So that company would be worth, even though it's 10 times larger, it would be worth 20 to 25 times more than the small business. So size is a massive determinant of a company's exit value. It's not necessarily easy to engineer, though. I think there's some strategies for improving a company's size, but size is a massive governor of ultimate exit potential for any company.
Fascinating. Yeah. So this is really a dynamic market. There are a lot of things changing all the time here. And it sounds like you really have to keep your eye out for what kind of businesses are going to be out there and how they can be optimized.
Very, very true.
So one question that I have is that many of these businesses are kind of old school, right? They were established 20, 30, even 40 years ago. And so how do you bring new technologies like AI to bear on these kind of old school businesses?
Yeah, great question. And I think it's top of mind for most folks these days, right? Maybe not everybody, but we're certainly constantly asking the question, how can we leverage AI to make our businesses more efficient and improve them, right? And we certainly don't have the crystal ball or the definitive end all be all playbook for how to do that, but we try to be thoughtful about applications for it. And I think a lot of the use cases are still very, very early stage, haven't been fully validated, but you're starting to see some cool kind of practical applications. The very surface level application is just looking at something like ChatGPT, right? Or an equivalent program and seeing how you can leverage that, right? Whether it's, generating content outlines or ideas, whether it's wordsmithing things, whether it's creating templates or checklists, or even it's getting better and better. The other day we uploaded a bunch of Excel spreadsheets to ChatGPT and basically told it to run it a trend analysis on a bunch of the raw data that we had that was, hard to parse. So you can start to do some cool stuff like that, right? And that's, maybe 5 years ago, you would have had to have somebody sit down for a couple hours in Excel and crank that out. And so those are a few really surface level use cases, but some of the more interesting stuff, you start to see some of these applied uses that are still very niche, but can be more high impact. So one of them, for example, that you're starting to really see is AI-driven programmatic ad buying for people who are using paid media to acquire customers. I think that's a use case that's really taken off. And before you still in a lot of cases will have a media buyer. And I think this is a really important thing to point out as a broader trend. You'll a lot of cases have a media buyer who's overseeing the AI, right? But the AI is doing maybe that media buyer is 10 times more productive now because the AI is doing the bulk of the grunt work. I think that's really the real implication of AI, is not that it's necessarily removing jobs, because I think you still need folks to almost oversee these autonomous agents or AI processes, but they create a lot of output and do a lot of grunt work that otherwise would just have to be humans sort of going in and doing all this stuff really granularly. So I think those are a few use cases. I mean, there's some really cool stuff around content creation, whether it's with text to voice or text to video, and, again, everything from training materials to all sorts of different use cases. I've started to see, it's more nascent, but I've started to see some really interesting uses around the creation of like autonomous agents is the term that you'll see sort of thrown around, where you can basically create sort of an AI bot, for lack of a better term, that will do certain activities for you, or even more complex activities like doing market research and stuff like that, right? Like you kind of direct a bot to start doing. So we have one of our businesses, we're testing a couple of these sort of autonomous agents to have them do some rudimentary tasks for us and kind of see how it works. We haven't cracked the code necessarily on some massive breakthrough, but I think, one of my favorite quotes about stuff like this, and I think it certainly applies here, is that the future is already here. It's just not evenly distributed yet. Right.
Right.
And so to me, that's always,
That's a quote from the writer, William Gibson.
Yeah. And it's a great quote, because it really, I always remind myself of that when I'm like, oh, what's this new, what's the hot new trend or the new thing? And it's like, okay, it's probably already here. So I just need to look at the people at the really front end of the adoption curve and see what they're doing.
Right.
Right. And it's like, that's how you can sort of trend spot and get ahead of these things, is like, or just be one of the people on the near edge of the adoption curve. Right. And then you can start to adopt all this stuff well before it becomes mainstream. So those are, I don't know if that definitively, that's not the definitive AI playbook.
But it definitely gives me and our audience a flavor of the possibilities of what could be added. Well, just to wrap up here, Matt, what do you dare to dream? What's your vision of the future?
I dare to dream, Ned, of a world where we can find a home for as many of these silver tsunami retirees as possible. And I'm doing my part to help provide welcoming arms for many of these businesses as they transition over the next 10 to 20 years.
Fantastic. Well, I really appreciate the perspective that you provided us. This is a whole new field for our audience, and I think it's really fascinating. Thank you, Matt.
Awesome. Well, Ned, thank you for having me on the show. And for folks who are curious about what I'm up to, I have a free newsletter about buying businesses, and we go through a lot of this stuff. It's at my website, mattbodnar.com, for anybody who's interested. And Ned, thank you again for having me on the show and letting me talk about mergers and buying businesses and all that good stuff.
Sure thing. Thank you, Matt. Take care.
Thanks, Ned.
Thanks to our guests today for their great insights on Dare, the podcast for innovators, entrepreneurs, and startup leaders. If you'd like your story to be featured on Dare, just contact us at info@darwaft.com. Dare is brought to you by Darwaft, the tech team that can make your vision a reality.